is it rational for a business to borrow money to invest in something? Well, what I would say is everything on earth was built with money borrowed to invest in. For example, you're in Dubai right now. Walk outside and look up at all those buildings. They were all built with debt. Everybody on earth, all 7.8 billion people, they need some store of monetary energy that they can trust and rely upon. And so you can't build anything of beauty. You can't build a company. You can't build a country. You can't build a family. You can't build anything on a crumbling foundation. And that's why Bitcoin is really important. And that's why, people that are believers in Bitcoin, we're not just here for the technology. We're not just here because it's a good investment. We believe in Bitcoin because for the first time in human history, we've invented an effective monetary network that's going to solve the problem that everybody on earth has, and they all have to solve it. How do I collect and store and channel my life force, my monetary energy in a virtuous fashion over time? If I have no hope, if I expect that all of my life is going to be drained out of me in 1, 2, 3, 5, 10 years, what's the point of planning for anything? How can you look out a decade or 5 years or 3 years or 20 years? What are you going to believe in if everything is going to zero, right? And that's why we're big evangelists of Bitcoin, because Bitcoin is hope, and Bitcoin is integrity, and Bitcoin is truth. And that happens to make it a pretty good investment idea, but it's a good investment idea because of its truthfulness and integrity and functionality, not the other way around. I would not recommend that anybody buy Bitcoin with excessive margin leverage. For example, I wouldn't take a 10-to-1 or 20-to-1 leverage bet on Bitcoin, where if the Bitcoin trades down 10%, you get liquidated and wiped out. That's not good. I think in general, any loan that is marked to market against the thing you're buying, like if you basically had a loan to value of 50%, right? You buy Bitcoin, and if it trades down 50%, you get wiped out. That, even that could happen. Would I borrow up to 20%? Well, maybe, but a mark-to-market margin loan is risky. On the other hand, if you borrow money non-recourse, or borrow money that's not mark-to-market against the thing you're investing in, it's a different risk profile. So we actually borrowed money in a convertible instrument. It wasn't secured. It wasn't a secured loan. It was an unsecured convertible loan. The primary benefit of the loan was the people that bought it got warrants on the company's stock above $398 a share. So they're actually giving us a 0.75% interest loan in return for warrants that are trading above where the market was at the time. We have the money, and we can invest it in something. So now we just get to the question of, is it rational for a business to borrow money to invest in something? Well, what I would say is everything on earth was built with money borrowed to invest in. For example, you're in Dubai right now. Walk outside and look up at all those buildings. They were all built with debt.
Yes.
Okay. When you get on an airplane, the airplane's financed. When you have a house, how many people buy a house with a mortgage loan? Most people. When you buy a car, so people buy cars, houses, airplanes, boats, commercial buildings. They build highways. Like, the world is full of stuff that was built with debt. How many companies borrow money in order to invest in their business? Amazon does. I mean, like, lots of Apple does. By the way, Apple, the world's full of companies. In fact, 95% of companies have borrowed money. So borrowing money there probably is no piece of commercial real estate ever developed that didn't have a loan on it, right?
Yep.
So it's not really strange, in my opinion, to borrow money in order to invest in a business venture, which is what we did. It's just that we were the first company to do it in the Bitcoin space, right? We basically, we borrowed money to invest in a big tech monetary network growing more than 100% a year that's 95% dominant. Okay, so is that better idea than borrowing money to buy a house? What's the odds that your house price is going to double in value every year for a decade?
For sure.
I mean, not high, but every single person that's ever bought a house probably took a mortgage out to buy the house. So my point really is we're in business to make rational investments, and businesses make rational investments and execute their strategy using a combination of debt and equity. So you can finance it with equity, you can finance it with debt. We actually finance things with a combination of those two things, and that's just what businesses do. So it would be aggressive if I took a margin loan, especially a margin loan, with like 80% loan to value, right?
Yep.
And it's pretty obvious, if the thing trades down 20% and you're 80% loan to value, you get liquidated. So that's an aggressive strategy. Taking an uncorrelated loan against other property, basically mortgaging a company. We borrowed money against the cash flows of our business in order to invest in another business, which is going up more than 100% a year, right? All we did is we just used our capital to invest in a line of business. By the way, when Disney built Disney World, I bet they also took out debt to build amusement parks. And when Emirates Airlines buys airplanes, oftentimes they'll finance them with debt. So it's not uncommon for companies to use debt financing in order to expand businesses if they believe in the business. If you thought about it a different way, you would say, would you rather have an asset that yields 5% interest in like 5% coupon that's taxable, or have a zero coupon asset that doubles every year?
Yeah.
Does not, which of the two would you want? Like, isn't it pretty obvious?
If you're asking me, of course.
But the thing that's doubling every year is yielding you 100% after tax. And the thing that's yielding 5% is 3% after tax. So at the end of the day, it makes a lot more sense to own the thing that's appreciating in principle, tax deferred. And the real question is, do you believe in it or not? If you believe that Bitcoin was going to go up 20% a year, if you believe that and you had a house, you could borrow $1 million against the house, take $1 million against the house and pay 3% interest, invest in Bitcoin and get 100% tax-free interest.
Yeah.
Like you would have a 98% arbitrage, right? Your $1 million loan, if you don't borrow the money, right, then if you don't borrow the money, then what do you have? You have $1 million in equity, and it goes up at the price of the house. If you borrow the money, then you're going to get $1 million, and then in a year it's 2 million, and a year it's 4 million, and in the third year it's 8 million, and in the fourth year it's 16 million, and the fifth year is 32 million, and the sixth year is 64 million, and the seventh year is 128 million, the eighth year is 256 million, the ninth year is 512 million, and you know where we're ending up. You would be a billionaire at the end of 10 years if you took a $1 million loan and you would have paid $30,000 a year or $300,000 in interest. So would you pay $300,000 in interest to make $1 billion?